Good evening, everyone. Time for another silver update. This is the daily chart of silver provided by netdania.com. You can click on the link below. Now, we had a fairly strong rally today. I was expecting this. The continuation pattern short term was very, very strong. A lot of rising wedges and things. So you can see from the long-term, very long-term trend line, and of course the very long-term resistance line, that the big number here is that 26 price. That is the big price we're looking at here. 25 is another one, simply because 25 is going to be the top of this little move here. You can see that we've burned through almost all the resistance. If we were expecting to get resistance, we should have gotten it right in here. And you can see that we kind of paused a little bit and then just took off through that. So there's really only just a little bit of resistance between us and 25, and then of course there's nothing between 25 and 26. So I'm expecting a strong continuation run at 26. Now that's where it's going to get really interesting, because a penetration of 26 could take out this trend line that has been in place for a very long time. Now that could be a confirmation of a new phase in this bull market, and we have no idea how far it can run after it crosses through that 26, 27 line and gets through this downtrend. But you can see that above that is going to be significant resistance all the way through this area from roughly about, we'll say 30 to 34 or so. There's going to be a lot of resistance in that area, but it's quite possible that it could run very, very hard. Silver crashes, as you can see, dramatically, but it also runs very hard when it does run. The other point here is the breakout of the MACD trend line. You can see that the MACD is actually now on the daily, it's crossed over the zero line. It's starting to go into overbought territory, but it's nowhere near the overbought territory it was back at the May SmackDown, all the way above 2, and the one from back in 2012 was about 1.5. So there's still room to run on that, and it is breaking out into new highs. That does not correspond to new highs on the price level. So we're not quite overbought yet on that. We could run actually very, very quickly. I would not be surprised to see in the next month to see us run all the way to 30. But then again, we could hit this resistance at 26. That was established over a very long period of time and many test points and touch points. And we could bounce off that, come back down, and back and fill from there. So we'll just have to wait and see. And I want to jump over to the member site. The new 2014 Perth Mint series are out. I did a review on the member site of what I think of each of the coins. You can read that article. But here's one that I posted. We saw the Year of the Horse come in on APMEX. There were only 280 of them. They have them over at Gainesville, but they don't have the 1 ounce. So I jumped on these, grabbed a roll, and the rest of the members grabbed them, and they're gone. So you can see a comment down here that someone made. This is from Cider. I'm on the alert list. I did not get an alert. I called my rep from APMEX. He checked the ID number for the coin. He said they sold out in a little over 5 minutes. Largest order 103, smallest sale 3, for a total of 21 orders. The alert list has 3,400 people on it for the 2014 Lunar Horse. They have a VIP list now that get the alert first. 100,000 purchase from APMEX's VIP. I'm there, but signed up yesterday to get on the list. Low man on the totem pole. So very interesting. He actually called. Now, if you remember, the Perth Mint puts a limit on those 1 ounces. It's 300,000. Sometimes they play with that, but I believe right now it's 300,000. So that's the 1 ounce. Now the half ounce and the 2 ounce are not limited, but then again, those are ordered on demand. If you remember the video I did on Perth products, a lot of times the half ounce and 2 ounce allotments don't reach that 300,000 that the 1 ounce is at, so those can be great deals. I piled in at the lows into the half ounce dragons. I think those are going to be a great deal simply because there aren't that many, and I think that's a great coin. But this coin here I'm tremendously excited about. I think this one's going to be a big winner. I'm very curious as to what type of premium they place on this. APMEX listed this one for 34 bucks or so, and of course the price of silver was moving very quickly. I think I got mine for 36 or 37 with shipping, and I didn't buy that many. So the other one is the elephants. I did put up a poll on the elephants. That was the one I covered on the member site. There were about nearly 6,000 of those, and it turns out that the members snapped up almost every one of them. You can see that someone got 3,000, so great deal for them. This probably will be a quick double. So if you're interested in that and the picks, of course, go ahead and sign up for the member site. Now, and by the way, we have added a option to pay by check. You can pay by Bitcoin. You can pay by PayPal. There's still some people who aren't really happy about using PayPal. I'm still working on an option for a straight credit card. We're going to try to add that soon. Now, I wanted to talk about some of the news of the day, and the first story, of course, is going to be this NASDAQ flash freeze, they're calling it. Of course, we've had flash crashes in the past. I've talked about these many times. This is the insiders or the controllers or the Illuminati or the people that run the world, whatever you want to call them. This is another warning from them that your money can be gone in a moment, and the markets can shut down and never open up again. And of course they do open up, but again, it's a warning. So the cause of the NASDAQ flash freeze is still a mystery. There's no smoking gun or squirrel in the mystery of Thursday's NASDAQ outage. The NASDAQ, where tech giants like Google, Microsoft, and Apple, now if you remember, Zero Hedge pointed out that Apple had just crossed below that 500 price right when everything locked up. And of course, after it came back online, Apple was up about 10 bucks from there. Apple trade ceased functioning for about 3 hours Thursday, and no official explanation has been offered. So you're telling me they don't know what caused it? That's ridiculous. But there's plenty of finger pointing and speculation about what crashed the exchange, which has been felled twice by squirrels. Now that's ridiculous. I'm in the business of networking and fiber optics, and that's just plain stupid. Anybody who believes that there's a bridge in Brooklyn, I'd like to sell you. NASDAQ CEO Bob Greifeld, in an interview on CNBC, said, "We're deeply disappointed with what happened yesterday. We aspire to perfection. We want to get 100% uptime." He said NASDAQ's first priority was to get its systems back working, not to talk to the press. Quote, "It's not our job, nor will it be to go on the press and the public while we focus on this issue." Greifeld blamed outside issues for the outage, but he didn't name them. So, here's a guy that you're going to trust with your money. I'm not going to trust a penny with this guy. So that's just ridiculous, absurd. They're obviously sending a signal to the people who have their savings and their retirement in paper, just like they did with the flash crash, just like they did with other outages that they've had. They're letting you know that they can bail in, shut down, close the markets anytime they want. These are completely rigged computer markets, and they can do anything they want with them, and they're letting you know that. So you are forewarned that if you have your assets in these markets, they're letting you know that they can take them at a moment's notice. Now, let's jump over to this Obama tuition story. And this is another one that's just so shocking to me. Obama is out stumping, and he never seems to stop campaigning, even though he can't even be reelected. But he's always out stumping for something. Now he's stumping for this tuition thing. And this is a perfect example. Of course, Obamacare was another one. But this is a perfect example of how liberals, collectivists, socialists, communists, whatever you want to call these people, they just simply don't get it. Now, I actually don't really believe that they don't get it. I think they get it, but they're just they're being disingenuous. So let's look at Obama's plan. Of course, the big problem we all know is that tuition costs have spiraled out of sight, and added to that is the fact that the job market is in a terrible state and student loan debt is going through the roof. So to address that, the president has come up with this new collectivist policy. Let's read a little bit. If Obama's long-term plan to transform higher education in America ultimately passes Congress, it may fundamentally change the relationship between universities and the federal government. But in the short term, he's using a method that should be familiar to observers of his administration. He's attempting to educate the market and allow it to make its own decisions. That doesn't do that right now. The president's ultimate plan, for which he suggested a tentative 2018 date, would tie student loans to university outcomes. Students who wanted to attend schools with good educational outcomes and a high return on investment would be able to get more government loans and grants and would pay a lower interest rate. On the other hand, students who wish to attend schools with poor educational outcomes and lower return on investment could do so, but would have to pay more for their own costs. Effectively, Obama's long-term plan would make it cheaper for students to go to schools with high graduation rates, high postgraduate salaries, and greater economic diversity. I don't know what that means. That's a bunch of gobbledygook. But anyway, so that's an example of collectivist thinking. The collectivists have one answer. They always have one answer. It's always the same answer, and the answer that they have is more government. They want the government to get involved and start rating things. Of course, that is not going to bring prices down. It never does. It'll never work. But so let's look at the problem and think about it for a second. The problem with tuition is that it's too high. Now, everybody who studied Economics 101 understands the concepts of elasticity and inelasticity of supply and demand. A demand that is inelastic is a demand that doesn't change based on price. A demand that is elastic is a demand that changes as price changes. So the problem that we have with tuition is that as it continues to rise, the demand does not fall. Now, why is that? Why is it that there is unlimited demand for education no matter how high the price rises? Well, the answer is very simple. The reason there's unlimited demand for education is because there's unlimited money. And the reason why there is unlimited money for education is because there are unlimited loans. And the reason why there are unlimited loans is because the government is giving the loans. So once again, government, the collectivists in government are stepping in to try to solve a problem that they've caused. The problem is rising prices. The reason why there are rising prices is because there's an unlimited amount of government money flowing in to higher education. Now, of course, that's not surprising. These are the constituents on the left, the socialists, the communists, the collectivists, the people who work in the universities, the people that get the grants, the people that run the government mind control centers in the universities and the public schools. These are primarily, for the most part, leftists, socialists, and communists. And of course, the government is funneling money to their constituents. So it's not surprising at all that we have more support going to them. But the answer is really very simple. Not even a free market answer, but just to come out and say that our new proposal is that we are going to set a lifetime limit of student loans. The most government-backed student loans that any one student can get in their lifetime is $20,000. If that were the proposal that Obama proposed, and there's some hints that it's similar to that, but you know that in reality it won't be like that. If that were the proposal, that you can only get $20,000 in student loans per person for life, you would see a dramatic drop in tuition prices, because what would happen is the universities would have to begin to compete for those limited dollars. People would begin to be more selective as to where they're going. Now, obviously, there's a lot of other factors. I've covered before the fact that the government has gradually made the student loan system into a slavery system where you can't bankrupt out of those loans. There's no longer a risk-reward scenario. Therefore, there's no more free market interest rate. Therefore, it's one gigantic collectivist mess. And of course, Obama and the collectivists are proposing more of the same to solve the problems that they've already created. So nothing surprising about that. The only answer that collectivists have is more government, and that's what they're proposing this time. So that is going to lead to inflation. We already know that, and we can see that in the silver price. The manipulators, the banks, the ones that run the entire world, I've covered recently how they rig the oil market, they rig the interest rates, they rig the stock market, and they rig the precious metals markets as well. The precious metals now are starting to rally. They've manipulated them, in my opinion, as low as they can possibly go. They've already bankrupted a large number of the mines, and they've also caused an enormous demand for physical metals all over the world. And now the supplies are starting to run thin. The price is starting to rally. So looking at the technicals of this chart, 26 for me is going to be a very quick target to be reached, and it might be the case that the run to 26 might take us right through to 27.50. And if we penetrate that downtrend line that has been in place for a long time, that is going to be a resumption of this long-term bull market, which has been around since roughly 2003. That's going to be a confirmation of the resumption of this bull market, and then after that point, the sky is the limit. And we'll talk to you next time.